Wednesday, August 17th, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at how Russia has declared war on the LBMA, the London Bullion Market Association, and Comex for that matter, because they all work together, these entities and the bullion banks. Before I start though, I'd like to talk a little bit about some of the news that we've seen overnight and also yesterday. Yesterday we saw European natural gas prices reach all-time highs. Electricity prices in Europe are going through the roof, and the same thing is happening here in the UK. We saw US nat gas as well go through the roof as autumn and winter approaches, or fall and winter approaches. So things are not getting better. These rising prices are not causing inflation, as I've said many times. They're the consequence of decades of inflation. And by inflation, I mean the classical definition of inflation, which is the inordinate increase in the supply of currency and credit. And what we're seeing now in the price rises of the CPI is not inflation. That's the consequence of inflation. And it's frustrating because everyone thinks that that is inflation. It's reported as inflation. Like this morning we've had UK CPI being published, and it came out at 10.1. It was expected to be 9.8. And all the headlines are saying inflation hits the highest level in 40 years. Yes, it's very confusing. It's one of the ways they get away with inflating the system, because they blame inflation on rising prices, which is really twisted. It's like blaming, saying you're fat because your belly is big. No, you're fat because you ate too much and you didn't exercise enough. So they twisted it all around, and it takes away the spotlight from the Bank of England and the government, because they're the real culprits for inflation. And I would argue as well that 40 years ago, RPI was used as a measure of prices. And they still publish it, RPI, and that came out at 12.3. And I spoke recently as well about the Bank of England tinkering with their CPI, or inflation calculator. Well, what the government has done, they said, oh, we made a mistake for the last 50, 70 years, so we've tweaked the CPI. And they've lopped off almost 1% of the CPI, so we can't really trust these numbers. And what's going on? Well, the currency is losing value. That's what's happening. It's not prices rising. It's the pound losing value. And why does the pound lose value? Well, because they issued and created too many currency units relative to real things. So now it's starting to kick in. And that's why we get a rising cost of living. But back to the LBMA. And I've spoken about the WikiLeaks document that was leaked, and it's from 1974, just before the United States made gold legal again for Americans. And the State Department, the Treasury, they were in contact with the London bullion dealers to try to ascertain how they're going to control the market, because they didn't want Americans going out there and buying all the physical gold. And one of the bullion dealers in that communique said, oh, the creation of a futures contract on December 31st, 1974 on Comex, that should help keep small investors away from buying physical. And the LBMA actually was an institution run by the Rothschilds, and actually they left the LBMA and sold it off in 2004. And the LBMA always was part of like the Bank of England as well. And the Bank of England also kind of separated itself from the LBMA, but it's still highly connected with the LBMA. You look at a lot of the board members and directors in the LBMA, they were ex-Bank of England people. So what the LBMA does, it's supposed to be a cash physical market in London, but it's mostly a paper market for the bullion banks. And the Bank of England provides a lot of the gold that it holds for foreign central banks. They hold about 5,000 tons. We only have 300 tons in reserves in the UK. Gordon Brown, of course, sold 300 tons, sold half of our reserves. So they lease all this gold that's their clients' gold to the bullion banks. So the bullion banks it's like when they go short stocks, they have to lease the stock, they lease the gold. But in London, the reason why London is so important is that there's no limit to how many times they can lend or sell that gold once they lease it from the Bank of England through the LBMA. It's called rehypothecation. So they could borrow a ton of gold from the Bank of England and sell, and have their clients sell like 100 tons. So it gives it creates an impression that there's more gold than there really is, and that's the whole manipulation scam. That's how it works. Spoofing is only part of it. As I said, it just moves prices in the short term. But the real manipulation is through the Bank of England LBMA. And Comex, of course, is another derivatives market, which is used to hedge as well, the LBMA position. So they're all working together. And recently, well, it was July 11th, I just arrived in Italy. Some of you know that I was in Italy in July for a symposium, the Roman Forum, and it was really interesting. And I made a video there when I arrived. London bullion dealer exposes paper gold Ponzi scheme. So he's a former LBMA member, and he's from the Hambro family, which is maybe a few steps below the Rothschilds in terms of importance in the city of London. Peter Hambro, he's not a London bullion dealer anymore, but he used to be, I think, in the 70s and 80s. And he exposes just what I said, that it's basically a scam. They don't really have the gold, and they encourage their clients to trade the paper. And they settle always in paper. So I recommend you watch my video as well. But what's Peter Hambro got to do with the Russian treasury? And the fact that they're now calling for, they call it a Moscow standard, right, to replace the LBMA. Well, Peter Hambro he founded a company called Peter Hambro Gold. I even had shares in that company. And all the mining operation was in eastern Russia, like near Siberia. So he knows the Russians very well. The company became eventually Petropavlovsk. They changed the name. And earlier this year, when Russia invaded the Ukraine and all the sanctions were put on Russia, I tried to buy some of the shares of Petropavlovsk, because it's actually a UK company with operations in Russia, and I wasn't allowed to. So Peter Hambro, I think, has probably, and this is speculation, but probably has a lot of contacts in Russia, because having founded and started a gold mining operation in Russia, you have to know very important people, I would say. And the other thing I would say, the Russians know the manipulation scam, not just through Peter Hambro, but also through GATA. Yes, Bill Murphy's GATA. They did a conference in Dawson City in the Yukon in 2005, and one of President Putin's economic advisors, was there. So they're well aware of how it works, and how the LBMA and the Comex are like lipstick. What does that mean? Well, there's the old saying about putting lipstick on a pig to make it look better. Well, that's how they make our currencies look better than they really are. The dollar, the pound, the euro, the yen, all the fiat currencies. They use this manipulation of the precious metals. That's the lipstick that they put on the pig. And why is that? Well, because ultimately gold and silver are really what used to back these currencies that we use. And the only reason we use it is because they used to have credibility, because they used to be a receipt for real money, gold and silver. And that, you can't change that. As Rafi Faber said, these are just substitutes for real money. So the LBMA and Comex are lipsticks on a pig, and the Russians know that. And this is the story here. It came out, I think, July 28th. And this is from a Russian newspaper. I was able to get a translation here. It says Treasury proposes to create an alternative to the London Precious Metals Standard, a new international standard for the precious metals market. The Moscow World Standard, MWS, should be created, which will become an alternative to the standard of the London Bullion Market Association, the Russian Finance Ministry said. And it's strange, it's getting harder and harder to get news from Russia. Of course, they've banned RT in the West. So this is like from July 28th, and it's taken us a couple of weeks to actually see the news come out. I saw this on Zero Hedge. Someone spoke about it there. I wanted to get the original source, which is the Russian paper here, which is vz.ru or vz.ru. So let's quickly go through this. And I think the important thing about this is that Russia's pushing for all these BRIC countries and others to join this. And together, they are really the producers of gold. So they have an interest in real price discovery, because right now, producers of gold and silver, and also investors like us, are getting shortchanged because the lipstick is making the currencies look better than they should be. And am I making this video just to try to tell you that the gold price is going to go up or silver price is going to go up? No, I'm just telling you that there is a battle here, a war, a financial war, and it could be very important. Where the price of gold goes, I don't know, but I think it will become much more valuable in relative terms, because the real producers of gold here they're gonna go to where they get more for their gold or silver as well, or even other precious metals like platinum and palladium. In a letter from the Ministry of Finance to industry participants, it says that an independent international infrastructure is needed to normalize the functioning of the precious metals industry. According to the department, it is critically necessary to create it. RIA Novosti reports. It is proposed to place a specialized international precious metals exchange headquartered in Moscow, using the new international standard MWS as the basis of the structure. It is also proposed to establish a price-fixing committee subject to the application of the MWS standard. It will include the central banks and the largest banks of the EAEU countries represented on the precious metals market. I think this is the East Asian, Eurasian Union, countries like the old stands, Russia, and so on. So I know they talked about price fixing. Does this mean they're going to manipulate it as well? No, I don't think that's what it means. It means that each day they'll fix a price at a certain time so that producers and buyers of gold can transact at a certain price, so they can have knowledge of where they're going to be buying and selling, because the price of gold is changing every second. According to the Russian department, it is necessary to bet on fixing prices in the national currencies of the key member countries, or new units of international settlements, such as the new unit of settlements proposed by the president of Russia within the member countries of the BRICS organization. So maybe a BRICS currency, who knows? The Ministry of Finance wants to make membership in this organization attractive to all foreign market participants. So there you go. I was talking about that. And I think someone wrote about this yesterday on Zero Hedge. And if you add these countries together, they produce almost 2/3 of the world's gold. And the US and the UK especially, we produce virtually no gold, but we manipulate it. So what are these countries? Well, especially China, India, Venezuela, Peru, and other countries of South America, as well as Africa. The agency expects that such a move will quickly break the LBMA monopoly and ensure the stable development of the industry. I think that's a way of saying that the LBMA is not a great place for producers of gold, because it's really not reflecting the real value of gold, silver, and other precious metals, of course. Recall that the Council of the European Union approved the 7th package of anti-Russian sanctions, including a partial embargo on gold, blacklisting 55 individuals and legal entities, expanding the list of dual-use goods prohibited from import. The largest primary silver and second largest gold producer in Russia, Polymetal, is exploring the possibility of selling Russian assets. So there you go. That's another thing to focus on. The fact that all these sanctions have accelerated this. They've backfired on the West. And I think we need to wait. Of course, this is not going to happen overnight, but it could be huge. It could, like this article says, it could break the LBMA monopoly on the gold market. And you could eventually see a lot of countries taking their gold out of the Bank of England and maybe storing it in Moscow or storing it in their own home countries. Because gold doesn't have to move around that much, because it's used as a settling mechanism in currencies. So if you have a balance, let's say, account, one country, Russia and China, they balance their trade at zero. No one has a surplus or a deficit. Gold won't have to move. Gold only moves really if you have huge surpluses and deficits in current account trading. So let's quickly look at the markets now. It's 8:22 a.m. London time. We've got spot gold, the paper gold price still controlled by the LBMA and the bullion banks. It's down just under $1 at 17.75. High's been 17.82, the low 17.73. Silver is down 5 cents at 20.10. High's been 29 and low 04. It's ironic. It would be ironic that it would take Russia, China, and other emerging market countries to actually do justice to precious metals investors, really. You would think that our governments, our regulators would be on top of this, but they're not, because they're owned by the banks. They're part of the problem. They're trying to keep us in this fiat currency game, in what President Putin called mythical values, in which governments and central banks print trillions of funny currency out of thin air. So there you go. Dow futures is down 20, NASDAQ futures down 30, S&P futures down 5 points, so fairly quiet here on the stock market front. So to the currencies here, sterling is unchanged despite higher than expected CPI. It's at 120.90. The euro is down about 1/8 at 101.57. Dollar is up 0.4% at 134.75. Dollar is up 0.2 versus the Swiss franc at 95.15. And the dollar is down 0.1 versus the yuan at 678.34. Check the dollar versus the ruble. Dollar is down about 1% at 60.50 versus the ruble. To the other currencies here, Aussie dollar is down 0.5%, 69.84. The dollar is up 0.2 versus the Canadian dollar, 128.64. And the Kiwi dollar is down a third at 63.20. So let's look at the general commodities. We got WTI crude up 0.75% at 86.71. So a lot of volatility here in crude oil. We've seen it as high as 93 recently, and now we're back below 90. Brent crude is up 0.75% at 92.50. High-grade copper is down 0.5% at 361. U.S. nat gas is up 0.75% at 93.70. And the Dutch TTF, European nat gas, yesterday I think we made a new all-time high above 250. It did come off intraday, and right now it's at 230, up about 1.5%. Let's quickly look at the U.S. Treasury market, the yield curve, the bond market. And I've noticed here that the 2-year yield is up 5 basis points. We're now at 330. The 10-year is up 2.5 basis points. So the curve has inverted further here. It's 45 basis points inverted, which is pointing again to economic slowdown. The 10-year, by the way, is at 285. And I saw yesterday as well that the Chinese, I think he's the prime minister, not the president, he's announced more stimulus for the economy. The People's Bank of China cut rates recently, and now the government is pumping the fiscal policy. So yes, the whole world economy is slowing down, not just the US. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great day. Take care. Bye.